PropertyGuru is a Southeast Asian property tech company, and it's out with earnings. The Singapore-based company posted a net loss of over $4 million compared with a net profit of $3 million a year earlier. Meantime, revenue increased 12%. Well, joining us exclusively is CEO and MD Hari Krishnan. Hari, good to have you with us. Some say it could have been better. I mean, what are the prospects going forward?
No, thank you for having us, Aslinda. I think we're very happy with the results of the company. I think the honest truth is the Southeast Asian economies are dealing with uncertainty, inflation, all of that. If you look at the financial performance of the business, we got double-digit EBITDA margins, double-digit growth despite that. And actually, if you look at the net loss number for us, a lot of the things that sit between adjusted EBITDA and net loss are around the valuations of the stock. So that things we don't control that are out of our hands. But even if you look at that number, over the first 6 months of the year, this year versus last year, we've reduced losses by 86%, $100 million less of net loss this year versus last year. So I think the trend lines are good, both for revenue and EBITDA.
You talk about uncertainties. They are staying. They're going nowhere. What kind of numbers can you expect in the quarters ahead?
Now, I think when you look at our core markets, they're Singapore, Malaysia, and Vietnam. Those three economies are in very different places. I think when you look at the real estate sector in Singapore, it looks stable. Transaction volumes have dropped off, but supply has come on in a big way. In fact, in the first half of the year, the total new volume of real estate that came online was double that of last year. So I think I would say overall the marketplace looks healthy. Malaysia is actually entering the second half of the year looking better. The first half was a little quiet, if I'm being honest. There is a disconnect a little bit between supply and demand. Asking prices remain high. Demand is dropping a little bit if you look at it. But transaction volumes in Malaysia look good. They look like they'll exceed 2019 levels. So if you look at a couple of our core markets, they're encouraging signs.
You talk about how strong the Singapore market has been, but we're seeing tighter residential policies, for instance. Might that impact the outlook for the market?
I think if you look at some of the policies that have been put in, they were really trying to control a market where pricing was getting out of control. And that pricing getting out of control was because demand was so far ahead of supply, both domestic demand as well as international demand. And I think they've been successful in controlling that. You are looking at rental prices sort of flattening out, even slight downward pressure in some places, sale prices as well staying sort of flat. So I think that's encouraging compared to the last couple of years. It makes for a more healthy ecosystem for the next year or so.
What are the risks out there?
I think the risks remain the same. It's inflation. Consumer sentiment is definitely impacted by what's happening in the world. The one thing that is unique to, I'd say, Singapore, Malaysia, etc., there's a flight to real estate. People actually want to park money in real estate. They see it as a safer asset, an evergreen asset. So I think some of those elements remain in place, but high interest rates are going to be a headwind.
Hari, I want to get a sense, you're talking about the Singapore property market. Where are you seeing property investors at the moment looking, and which of the markets which you think may be undervalued and those which are at the moment on a tear?
Yeah, I think in Singapore, when it comes to it, we're seeing investors looking across all segments, to be honest. 80% of demand typically comes domestically. I think very often the headlines are grabbed by immigration from other countries or foreign investors coming in. The reality, the fact is domestic demand remains in place and looks robust, both for government housing as well as private housing. When it comes to international investors, they continue to invest in the luxury sector in particular. I think the one thing that is going to be a little bit of a dampener there is rental prices have begun to flatten out. So rental yields are not going to be quite the same, or the inflation in rental yields are not going to be quite the same as in previous years. When it comes to markets, I would say Vietnam, Malaysia, both these markets, you have seen prices come off quite a bit. So there's a good argument to be made that both these are slightly, when it comes to pricing, there are opportunities there for the smart investor.
So absolutely, but again, segments are important here, and from an international investor, there are also some of these countries, particularly Thailand, have got a lot of restrictions in terms of what you can buy. How do you actually surmount those, and what do you see with international buyers and how they're trending?
Yeah, I think there's a big variance. I think when you look at certain segments, so for example in Vietnam, there's been a lot of interest in commercial real estate. Residential real estate supply has been throttled by a lack of access to credit over the last year or so, driven by the government, who's trying to clean up the real estate segment, reduce corruption, reduce indebtedness levels among real estate developers, etc. So I think that particular market The opportunity in the short term has been very much more so on the commercial side of things. When you look at Malaysia and Singapore, the opportunities have been more skewed towards the residential side of things, if I'm being honest. And then you have emerging markets like Thailand, where frankly the real estate prices have dropped off significantly over the last 2 years. So there are opportunities across the board.
Indonesia now as well. I mean, tell me about your business there and what you're doing, what your strategy is, and what you're seeing on the ground in terms of property and value, if you will.
Yeah, so earlier this week, we actually announced that as part of we regularly relook at our businesses. We look for unit economics. We've been in Indonesia for over 10 years, but we actually announced that we are going to exit our marketplace business from Indonesia. And this is part of a focused effort to try and drive our investments towards assets where we think the unit economics are more robust, where we will see more growth in the coming years. So our data services, for instance, or our fintech business here in Singapore, where we've now brokered over $5 billion worth of loans. So we're definitely trying to shift our investments into segments as well as markets where the unit economics are showing us that there is potential for further growth in the years to come. And I think that's going to continue to be an approach that we take going forward as well.
But when it comes to Indonesia, can you afford not to be targeting that market? 270 million people. There must be an Indonesia strategy.
So I think, we've been in Indonesia over 10 years. I think people look at the population and they assume that's a great economy. Clearly, that's true. When it comes to the real estate sector, though, the biggest opportunity is in Greater Jakarta. The population there is 30 to 40 million people. So then you got to think of the opportunity really as a 30 to 40 million population country. When you look at Vietnam, that's 100 million people. Significantly larger opportunity, higher willingness to pay. The prop tech models actually have good unit economics. The fact of the matter is in Indonesia, unfortunately, we have not seen, not just for ourselves, but we have seen no other business actually prove good unit economics in that particular market.
Not too long ago, PropertyGuru was talking about expansion plans. It seems to be retreating for that expansion plan. I mean, so what's the growth strategy? What are the key markets you're focusing on right now?
So I think expansion for us is both geographically, but also via business models. So if you look at our data services business, for example, we got a data product called Data Sense that we sell to real estate developers as well as urban planners and governments. We've seen great pickup of that, both here in Singapore, but also across the border in Malaysia. We're seeing more and more people interested in that, and we see a lot of potential for growth over there. And then when it comes to our fintech segment, as I mentioned here in Singapore, it's not just the quantum of brokerages, sort of mortgages, but also our ability to digitize the mortgage experience for the banks as well as the consumer. So I think there's a lot of potential there. We will be investing hard into those segments.
Harry, what's the next big thing for you guys? I think you're alluding. I'm sure you're going to bring up AI here as well. But give us a sense of what it can bring to your business.
No, we're very excited. Thank you for that question. We're really excited about generative AI and what it's doing for our business already. We've already pioneered some products where generative AI is now visible facing the customer. So when it comes to listing descriptions, we're driving agent efficiency by using generative AI to help them with that. We're using co-pilots inside the company to drive better code quality and engineering efficiency. Most recently, we launched a product called Guru Picks, which uses machine learning to actually build a personalized feed of real estate listings based on your browsing habits. So we're looking at your browsing habits, trying to understand what's the property type, what's your budget, etc., and then giving you a sequence of listings which are optimized to you. So I think we're really excited about the potential for technology to completely change the experience for consumers, but also for real estate developers and agents.
Shareholders seem unconvinced about your plans because when you take a look at how PropertyGuru has done, is down 6% year to date. How do you convince them that there's growth ahead and it's worth investing in the company?
I think that's a great point. I think when we look at it, I think the share price, unfortunately, does not reflect the business performance we feel we've delivered in the last few time segments. In the end, we focus on the elements we can control, and that's the revenue, the EBITDA, the strategy, etc., and showing progress across all of those. If you look at our biggest investors, whether they be private equity or the public investors, they remain invested in the stock. Candidly, one of the challenges we face is to increase the liquidity of the stock, making sure there's a higher trading volume there. But in the short term, actually, we are much more focused on business performance and the variables we control.
Harry, always good to have you with us.
Thank
Harry
you.
Krishnan, CEO and MD of PropertyGuru Group.